There we go. There we go. All right. Welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. Today is Friday, December 20th, and here's a look at the markets. The Dow ends the worst losing streak since the 1970s, barely. We'll take a look. Stocks try to bounce back after an awful week. Bitcoin plunges. Good inflation data. We'll look at the PCE Price Index. Will the U.S. government shut down? And is Santa Claus coming to town? Plus, we'll take a look at our open trades and see what's going on there. As you can see, there's a lot to talk about. So let's go ahead and get started. If this is your first time here, my name is Mark Hodge. I'm typically joined by Marcus or with Marcus. And hey, he's enjoying some time with his family. Outside of the US, and he will be back soon. With that said, let's go ahead and go to the charts, and here we go. The Dow. So this has just been a monster slide for the Dow. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 consecutive losing days in a row. Haven't seen that since the 1970s. I was not watching the Dow in the 1970s, so this is the first time I've seen this. And yesterday finishing higher by 15 points, which is nothing for the Dow when it trades at 43,000. So barely finishing higher to end that losing streak. Today, stocks trying to bounce back, but it has been a rough week. If we look at where we're at weekly, we see that this is the third consecutive losing week for the Dow. The Dow down 2.3%, was down 3.4%. So coming off of those lows, it looked like it was going to be the worst week since March of 2023. But the week is not over yet. If we take a look at the S&P looking at its second losing week in a row. And we'll see where we end the week right now, down just over 2%. And the S&P finishing slightly lower yesterday, giving up those gains that we saw early with the attempted rebound. Right now, it looks like it's a buy the dip environment for stocks. And we see here that we're trading at session highs for the day with the S&P up 1.1%. So being a buyer going into the weekend is positive. If we were seeing some selling going into the weekend, that just shows that investors are concerned about holding positions over the weekend and wanting to wait until next week to see what's going on. So this is pretty optimistic based on what we're seeing right now. If we take a look at the NASDAQ also rebounding nicely, up 1.1%. If we go to a weekly chart here, we see that we've come well off of those lows. Right now, the NASDAQ down 1.7%. Last week finishing higher, so this would be a losing week. Looks like that's going to be the case, even if we continue to rally today, but not as bad as that 3-week slide for the Dow. So market's just going crazy here, and I knew it was a big one, but I didn't realize it at the time. Talked about this spike on Wednesday after the Fed, and this was the second largest spike in the VIX in history. The first largest was 115% increase in February of 2018, where there were some concerns. And this one with a 74% spike or jump in one day. That was the second biggest VIX spike. The VIX, also known as the Fear Index, showing that investors see substantial volatility getting priced into those S&P options, which means they expect bigger moves in the market. Now, yesterday, down, and we were actually rallying through the day, so our VIX was increasing, let's say. Today, after spiking, it has reversed and is down 20%. So it looks like we're getting a little bit of that fear out of the market now with volatility coming down. And that's typical for an up day like this. If the markets are up 1%, that's normal for the VIX to be coming down. So pretty interesting moves here. While we're at it, let's go ahead and take a look at crude oil. crude oil's movements have been pretty muted compared to what we've seen in the overall market. Crude oil, though, looking at its fourth consecutive losing day. So Monday, we reversed off of these highs and finished lower. Tuesday, we were lower. Wednesday, we were lower. Thursday, we were lower. Right now, coming off of those lows after getting down to 68.42, right now trading above $69 a barrel. We'll see if we can turn positive for the session. Right now, crude oil is down 0.4%. Now we have to look at Bitcoin here because someone tossed some cold water on Bitcoin this week after Bitcoin made new record highs on Tuesday. So pre-Fed, Bitcoin rallied above 108,000. Today dipped down to 92,000 before coming off of these lows. Right now we're flat for the session. So pretty impressive comeback today, since at one point we were down more than 5%. Now just flat for the session. So rallying off of those lows, still trading well off of the record highs that we saw on Tuesday. And we'll see if we have a 3-day slide here for Bitcoin or not. Right now, trading right around 97,300. So markets are definitely on the move. And let's go ahead and take a look at the economic calendar. Let me go to PowerX Optimizer and let's look at what we have here, because today we did get some decent news here. A red flag report an hour before U.S. markets opened up. Core PCE Price Index, and this is the Fed's favorite inflation gauge. So some members a little bit concerned about sticky inflation, and a member decided to not vote for a cut. And we know that the number of cuts projected for 2025 have been slashed and cut in half. Well, core PCE coming in better than expected, a 0.3% reading increase last time, and a forecast of 0.2%, but coming in 0.1% higher. So this is definitely a plus. Let's go back to the charts and look at the E-mini S&P. Take a look at how the market reacted to this news. Let's go to a 5-minute chart here, and we see that this is really where that reversal came. So markets overnight starting to slide and pull back. After the European session opened, we made session lows about 2 hours before U.S. markets open, and then a little bit of a drift. But we see this big volume bar and increase here, and then more follow through once the markets open. So it looks like traders taking that positive report into consideration with the buy the dip mode that we see right now. Indices are sitting at highs of the week. Let's go ahead and take a look at the heat map, see what's going on here, and everything's up, which is a good thing. We've seen recently with the Magnificent Seven now making up about 33%, about a third of the overall market because of their size. If we look at the S&P 500, we've seen days where the Magnificent Seven rallying, but everything else having a hard time. Not the case today. The Magnificent Seven is up, and so is everything else. So Nvidia up 2.2%. Microsoft a small move here, but up 0.3%. Apple up 0.5%. Google up 0.9%. Meta up 0.7%. Amazon up just a tad, 0.25%. Tesla up 0.6%. We almost need to get AVGO in here and make it the Magnificent Eight. Look at this. AVGO leading semis today with a 4% gain. Looking at everything else there, beating NVIDIA, beating AMD, beating Qualcomm, beating Texas Instruments. Micron, the only stock that's down, but I would just say it's flat. Everything else maybe 1% to 2%, and AVGO doubling that. So nice move with AVGO. Financial services doing great. Energy's having a decent day. Real estate's doing well. Everything's looking pretty good here. So let's take a look at some individual names, and I want to bring up FedEx here because FedEx reported earnings, and they reported better than expected earnings. They beat on earnings They did report a revenue miss based on forecasts there. They said, or they announced a spinoff of its freight business, and it seemed as though investors were liking that, especially at the open. We've come off of these highs, but FedEx still higher by 1.7%. A little bit later on, we'll see if UPS was able to uh, take this move in FedEx and have a little bit of a sympathy move. Now, another company reporting here, Nike, yes, yes. Better than expected earnings, better than expected revenue, and Nike down. It was down 7% pre-market, even though they had better than expected earnings. But they were. Some would say that the expectations were low, and Nike showed a decline in revenue year over and earnings year over year. The company's CEO said Nike's turnaround plan could take longer than anticipated. So that led to the drop early on, still down 1.2%, although during the session we did see a spike. It went positive, trading off of those lows, and we'll see where Nike goes from here. Let's look at some trades. So the WTF analyzer, there was one new signal, and this was CEG. I did not take this trade. CEG, we see that it has less than 5 years of data. That's what we typically like to look at when we're analyzing signals. Also, based on the trades that I'm in, I'm pretty full here. So no entry for me on this one, although it was a new signal. Exits, no exits right now. Now, ODFL, unfortunately, was stopped out with this drop here. T-Mobile is one that both Marcus and I are in, and we picked up more shares on this one to bring our average entry down. T-Mobile up a little bit today. Now, EA Sports, I picked up this one with a 5% open below entry is what we call it, from an original signal, something that I like to do if I have some open slots and I see that a stock is pulled back. So down just a little bit from my entry, opening lower but reversing today. Starbucks was one that I picked up more shares today. I think it was 87.78. So bringing my average entry down. I don't know exactly what it is, but the original entry up here and then adding down here. Looking for this to rally back. And this is where if we could pick up some more shares after a stock is down 5%, we find this works nicely with this strategy. Verizon, after following the overall market down, rallying a little bit today. Schwab was another one where I picked up some shares in addition to the original entry and up today as well. Duke Energy, rallying today, so up yesterday, up today, no exit yet. General Motors, another one, rallying today. So looking for Altria Group. This was another one that I traded, and right around its flat line here. So what's happening is what we expect when we're putting on these WTF trades. It's a little unfortunate that we saw a little more downside before it's starting to reverse, but this is what we're here for, right? Where we see that there's this slide, but it's a company in the S&P 100, NASDAQ 100. We have this oversold condition, a little more downside than we had hoped, but a reversal today, hoping that we see that pop going into next week and some nice exits to take some profits on this, or just get out for some trades for small losses if we see this reversal and rally continue. So that's what we're hoping for with these WTF trades, and why we would pick up some more shares, and why we trade the strategy of, all in all. Let's take a look at some wheel opportunities here. BP reversing off of these lows, positive for the day. I'll take that. Nothing for me to do right now. CSIQ getting hammered yesterday, but coming off of those lows, getting back up to this mark here that I see as support. So Looks like we're getting that reversal, hoping for this to continue. Decent day for CSIQ. Now, I need to correct a statement that I made yesterday because I mentioned that I got out of my ON trade, and I thought I did. I thought I bought back those puts. And when I was looking at things yesterday after this video, I realized that I was still in ON. So I thought I had closed ON and I picked up GDXJ. Yesterday, because with my plan, I wasn't supposed to be in both at the same time. So I went ahead and closed ON. I still had a 50% gain on the puts that I sold. It looks like right now these 44, or sorry, ON, it looks like the 64 puts that I sold that were expiring today would have expired worthless right now with this rally. ON's at 66.08. But just following my plan. And I wanted to mention that because I did not get that 8-cent fill like I thought. And that's a rarity for me to make a mistake like that. But I just wanted to mention it for full transparency. I did trade GDXJ. So that was what I traded after I thought I got out of ON. And like I said, I got out of ON yesterday for a win. But GDXJ, I've sold the 45 put, which is expiring next Friday. So right now that's trading right around the strike that I've sold. We'll see where this ends up. But I'd be happy to own shares of GDXJ at the 45 level. So that's the strike that I sold. Halliburton rallying a little bit today after a pretty nasty slide this week. I'll take that. Coal's making a move higher. This is one Marcus is in. I am not. Merck trading around the $99 mark. Slightly lower for today. We talked about ON. If anybody sold the 64 or 65, those are strikes that I've been interested in over the last couple of months. Looks like you're doing fine on this one today. Maybe there's a new opportunity next week to trade this one. UPS looks like a little bit of movement all over the place, possibly a rally with the broad market, maybe a sympathy move because of FedEx and FedEx's gains. Right now, UPS up 2% here. Marcus, he did a partial rescue mission on this one after the bigger drop. I believe he sold the 125 put. So right now, we'll see if he gets assigned shares or not. Let's move back over to the calendar here and see what's in store for us next week. If we look at the economic calendar and move on over, we see Monday. It's a light economic calendar. We have consumer confidence on Monday. On Tuesday, we have durable goods, core durable goods, new home sales. Wednesday is a bank holiday. Thursday, unemployment claims. Friday, nothing. So this is what is known as a holiday week. And if we look at the holiday calendar, sometimes it's not as easy to figure out when markets are up, when they're not. It's pretty easy to know that in December, Christmas Day, markets are closed. We have an early close on Christmas Eve at 1 p.m. Eastern time. So this is a week that typically sees low volatility, not a lot of action. And this is a great week to take some time off, spend time with the family. If you just can't get away from trading, review your trading plan, look at some strategies you've been working on, see if there's changes to your plan, improvements that can be made. Good time to kind of just enjoy life. Just enjoy life. So markets are closed because of Christmas and a short trading day on Tuesday. Now, Santa Claus rallies. This is something that might happen this year. This is the Santa Claus rally. Sometimes it's tossed around as this general, markets go up in December. But technically speaking, this is a stock market phenomenon that happens in the last 5 trading days of the year and the first 2 trading days of the new year. So the 26th through the last 5 days going into the first 2 days of the new year. So going into next week and then also the following week through the 2nd. The S&P 500 is typically up 1.3%. So this is a Santa Claus rally time. We'll see if that continues to be the case. I think it will, especially because of the Fed reaction and what we see here with the markets reversing. I mean, even since we started this video today, we are trading at session highs and continuing that move higher. Looks like traders are using this as an opportunity to buy the dip after that big slide on Wednesday. I think we're going to see that continue into the new year. And this is dad joke time and an announcement. You know, I sad to say, but I have an issue with my eyes, and I don't see myself doing coffee with Marcus and Mark, or just Mark, next week because of the holidays. So I'm gonna take some time off. I hope you do as well, and we'll be back here the following week, and then we have the New Year's holiday. But I'll be doing a coffee with Marcus and Mark. I'll see if Marcus is joining me on Monday, December 30th. So take some time off, enjoy time with your families. Happy holidays, have a Merry Christmas. Hope you've enjoyed these videos. If you do like them, please always give us a thumbs up. We appreciate it, and subscribe to the channel. Hope you enjoy the commentary that we offer and the recaps that we give and the opportunities that we've shared. And with that said, happy holidays and happy trading, everybody.